Welcome to your daily 5 minutes market brief with JPMorgan and Luna. Today is September 3rd, 2025. I am Luna.
I am JPMorgan. It's September 2nd, 2025. And today, we're looking at a date where markets broadly fell. Bond yield went up and investors clearly moved towards safety. All this happening against a backdrop of some pretty intense macro uncertainties. Our mission really is to unpack what drove these shifts, what it could mean for you, whether you're looking at stocks, bonds, or even crypto, and then see what's on the horizon.
Exactly. The real question today seems to be, with all this policy noise shaking things up, where are people actually putting their money for safety? And what does that tell us maybe about the future of money itself?
Okay, let's get into it then. The big U.S. stock indices, like the S&P 500, dropped around 0.7%, snapped that recent winning streak. And meanwhile, over in the bond market, Treasury yields climbed. The 10-year was up about 5 basis points.
Right, 0.05%.
Pushing it to around 4.28%. It definitely felt like a global bond sell-off.
Yeah, and what's really striking, I think, is seeing stocks fall while bond yields are rising. That's not the usual pattern, is it?
No, it isn't.
It strongly suggests money was being pulled out of both. A real move away from risk across the board. So the question becomes, what's making everyone so nervous?
Well, digging into the why, it looks like two big policy uncertainties really spooked the markets. First, there was a court ruling that threw some doubt on whether past U.S. trade tariffs were actually legal, sort of muddies the water on trade policy going forward.
Creates unpredictability.
Exactly. And second, something quite extraordinary, real political tension around the Federal Reserve's independence. We had Fed Governor Lisa Cook actually taking legal action to stop her own removal. I mean, that's a major challenge to the central bank.
Wow. Yeah, that's significant.
And you add that to the sort of background worries about government debt, lots of bonds being issued, helps explain why bonds sold off too.
Right. And if you connect those dots, well, it makes sense investors scrambled for safety. Look at gold. It surged. Hit a record high, over $3,500 an ounce. That's up more than 33% just this year.
Incredible move.
Driven by bets, the Fed will have to cut rates soon, you see. And the U.S. dollar also gained almost 0.7%, another traditional safe harbor. It feels like a real scramble to preserve capital when policy feels unpredictable.
But here's a twist, right? In this environment where everyone's apparently ditching risk, crypto actually held up. Bitcoin, some other major crypto assets, they actually edged up a bit.
Yeah, that is interesting. It suggests maybe some investors are starting to see these digital assets differently, perhaps as a kind of hedge against currency risk or policy risk, almost like a digital gold.
A reaction to the uncertainty around the dollar and what central banks might do next.
Possibly. Definitely highlights this search for assets outside the traditional financial system, not just shuffling things around within it.
So what does this all mean for the broader economic picture then? Well, the data we got wasn't exactly painting a rosy picture. The ISM Manufacturing Index for August that came in at 48.7. Anything under 50 means the sector's shrinking. And this is, what, the 6th month in a row?
6th month, yeah. Slightly weaker than people expected to.
Which, fuels that rate cut speculation we mentioned.
But also maybe whispers a bit about stagflation, slow growth, but potential price pressures.
Could be. And we also saw July construction spending dip slightly, down 0.1%. Just confirms that high interest rates are still biting, especially in housing.
And beyond the economic numbers, there was a significant geopolitical development too. Russia and China signed a formal agreement, legally binding, to move ahead with that big Power of Siberia 2 gas pipeline.
Yes, that's been talked about for a while.
It has. Minimal immediate market impact, probably, but long term. It's a strategic realignment of energy flows. It signals a deeper shift in global energy partnerships, which could reshape markets down the line. Another layer of uncertainty, really.
Okay, so looking ahead then, what should folks keep an eye on? The big one is definitely Friday's U.S. jobs report, the August non-farm payrolls number.
Consensus is looking for around, 75,000 jobs added?
That's the forecast, yeah. And this report will be absolutely crucial for those Fed rate cut expectations.
Right. That's the key question, isn't it? If the number comes in weak, it could cement those rate cut bets. Good for gold, crypto, rate-sensitive stuff. But if it's stronger than expected, well, that could challenge the whole narrative, maybe push yields even higher.
We also have the Treasury announcing its 3-year note auction details on Thursday. That ties back to those worries about government borrowing. And the usual weekly oil inventory report from the EIA, mainly for the energy sector folks.
So pulling it all together, what really stands out to you from today?
For me, it's that interplay. the policy uncertainty clashing with fiscal concerns, and how that's driving expectations about the Fed, and how that's rippling out not just in stocks and bonds, but into gold and even crypto.
Absolutely. That complex mix is really setting the tone, how these macro factors evolve and how the upcoming data lands relative to expectations. That's going to be key.
It really is. And for you, the listener, maybe the question to ponder is this: how is this wave of uncertainty around policy, around government finances, going to keep chasing trust? The trust between traditional financial systems and maybe the growing appeal of these alternative assets like gold and crypto. Something to think about.
You've seen the headlines, but what really moves your portfolio? Money.ai scans 1.3 million signals a day, earnings, sentiment, macro shifts, and turns it into one personalized briefing focused on your holdings. No noise, no guesswork, just what matters. Money.ai. Know what moves your money.